Welcome to Investors Insights, episode number 173. Today we will be discussing reality versus perception and how it can impact your portfolio. And also don't forget to connect with us on Facebook, LinkedIn, and Twitter. We'd like to continue the discussion there with you. So let's get right to the topics that are important to today's investors. That's you.
You're listening to Investors Insights with Greg Powell and the Portfolio Strategy Team from flatlined Partners.
All right, gentlemen, great meeting. Very excited about things going on. We got a lot to cover here. The first thing that I think we need to say, though, is that congratulations to Bobby Norman and his wife, Casey, little baby boy, and very excited.
Thank you. We're excited.
For those of you viewing, if you see Bobby nod off during the video, at this point, he can do so. Just for what that's worth, Bobby. So very excited. Congratulations. So happy to have Bo here in our lives. Okay. So here at flatlined Partners. So now we got into some heated debate this morning. I actually thoroughly enjoyed it. So Trey, you brought up some points about perception and reality. The numbers are saying one thing, the markets are saying another thing. So talk about that.
What's interesting is we had a really nice rally early in July, and then the markets kind of have flatlined really. What we were looking for is hoping for earnings to be the catalyst to drive markets higher. And so far, we've had 70% of earnings that reported have beaten expectations.
Right.
That's very good. And last week, we had 190 companies report. 70% of those beat. That's very positive. The market, though, S&P 500, was 2 points lower at the end of the week than the beginning of the week. We see, record highs, record intraday highs throughout the week. That's starting to taper off. What we were hoping for coming into last week was the Fed, no news. That's what we got. Earnings good. That's what we got. But the market doesn't seem to be responding.
Right.
On the top end. What's good news is that while the large caps are consolidating, small caps for the first time in 24 months are catching up. And so the average stock is moving higher. So over the last week, over the last month, small caps are catching up with the Dow and the S&P. But that's just never really reported. And so the underlying internals of the market are getting stronger. And so hopefully going into August, which we discussed this morning, is one of the worst months historically.
Right.
We'll get some of that momentum into small caps to get the broad market moving forward. And hopefully the earnings picture will continue to be bright. But, there's a lot of mixed bag out there.
Right. Well, and that's why I mentioned perception versus reality. Because August historically has been a tough month. People coming back from summer vacation, getting ready back to school, back to reality. Also, we've got all these issues going on from a political standpoint, a global standpoint. So that's causing uncertainty with people as to how do I move forward. Bobby, you brought up news just about the economic numbers. Talk about that.
Yeah, Trey just said it. July was a mixed bag. Housing hit a 7-year high, which is always positive. Housing continues to be the strong point in our economy. Consumer confidence stayed steady when it was expected to fall, especially with the Brexit going on. And then also last month, the durable good orders fell 4%, which is concerning. And then we also had a pretty disappointing GDP report. Ashley, I know you're going to cover that. And then so this Friday, we're looking towards the jobs number to make sure that we're staying steady in economic reports. So
Yeah. And then Ashley, you did some really good work on GDP, gross domestic product. So talk about that.
Right. As Bobby mentioned, it was a paltry 1% growth for the first half of the year.
Right.
Obviously, we need more. And
so you got 1% over there, but you got corporate earnings looking good.
Exactly. So
mixed bag.
And we broke that down a little bit for you to what's causing it. The GDP drag, and primarily it's a large pullback in investment by companies going forward. And that's the uncertainty of the election, as Trey mentioned. Companies are doing well and making things, but the B part of that is they need to buy things for doing other things later.
Right.
That's not what they're doing as much of right now because they're just waiting on the election to see who wins and what the capital gains.
Which then adds to August and September being an uncertain month just because businesses go, we're not sure, we're just going to put everything on hold till after the election.
That's right. It's just a hold.
Right. So the economic numbers across the board, we're watching to see how it can impact your portfolio. How do we stay defensive if need be, but then also if we start to see a broad-based rally moving more towards the equity side of the market. So we've gotten a lot of the information we wanted to receive to check off to say this looks good, this looks good. But the reality of it is the market's not picking
It's
up
not
on
reacting.
it. It's not at this point. So on that note, just know that we're going to keep you updated. And again, the theme right now is perception versus reality. And we ultimately know that the reality side will rise to the top. We've just got to work through it. So keep those questions, those emails coming to us. That's how we come up with our that you're interested in. Time watching. We want you to understand that this year is moving along fast. It's hard to believe today's August 1st, and we've only got a few more months till this year is over, and it's going to be eventful. So stay with us. Look forward to talking to you soon.